what's in store for us. While the S&P 500 index, of course, managed to close in at a record high. Let me also welcome on board then Pankaj Pandey and chat about what he's betting big on in this market. Pankaj, hi, good morning. Good to have you on the show. Just wanted to understand whether or not there are any PLI beneficiaries that you're betting in on as a house call.
Yeah, hi, good morning. So I think this year is a year of mid caps and small caps, and within companies which are expected to benefit from PLI, I think one of them is Amber. We have a buy rating on the stock. So our sense is that you have a decent amount of opportunity of about nearly 10,000 odd crores, because our sense is that the government would eventually look to restrict either the import of room air conditioners or its components, and which is why the domestic component will go up. I think the other leg to this opportunity is something like an export opportunity of nearly 27,000 odd crores. So, which is where I think PLI is going to sort of help in both the cases. The company has announced a capex of 300 crores to tap this opportunity, and our sense is that they will be able to grow their revenues by nearly 20% and profits by even more at about 26%. So which is why we like this stock. Besides this, Dixon is another stock which we expect to be a good beneficiary of the overall PLI scheme, especially for the mobile phones. And although current forward multiples look expensive, say at nearly 40 times FY23. But our sense is that mobile as a component or as a category is a good opportunity for the company to tap, and which is why the revenue or the profit profile or CAGR growth rate is expected to be in excess of 50%. So we like both these companies from a PLI beneficiary perspective, and I think these are one of the few mid caps and small caps one should be looking at from a 4 to 5 year perspective. That is when we would expect the entire benefits of PLI to sort of pan out.
Okay, just looking at some stats and ex-financials, so far the month of April has actually been a strong one for the bulls, irrespective of the volatile moves that one has seen off late. So if I just take a look at the Nifty, that's up a little less than 1% for the month of April so far, but just look at the kind of outperformance that you've seen from the mid and small caps, exactly what Pankaj was just talking about. The mid cap index is held up by about 2.7% and small caps are up 3.7%. Few trading sessions only this month, but that is what the data is suggesting. In fact, the Nifty mid and small cap indexes are within 1.7% of making a new high, and this in contrast to the banks, which are underperforming. The bank Nifty is a good 12.5% away from its all-time high. Kunal, just wanted to get your sense on what you're watching in terms of an index move. Do you sense that the rest of the April as well would belong to outperformance from the broader markets? Would it be a mid and small cap heavy month? And more importantly, what about banks? Will this underperformance continue given that they're very far away, a good 12.5% from their all-time high?
Both these statistics which you mentioned, they fit in really very well, because when the markets are in full swing, like for example when the indices are in full swing, you get the markets completely into a risk on mode, and those high beta sectors and the high beta stocks, they tend to outperform. So we saw the phase where Bank Nifty, from being a huge underperformer even in the post I would say March 2020 rally, it picked up pretty late as compared to the Nifty, but then the pickup, even though it was late, was very ferocious. And if you remember, I think from the October lows or September lows 2020 till Feb 2021, the 5-6 month period, you saw a very strong bout of outperformance from the Bank Nifty, and which is why you are now seeing a cool off on the index. So the Bank Nifty has already made a fresh high for itself, and from there on it went into a phase of correction. Now typically when the Bank Nifty and the market goes through a choppiness in correction, you see the mid cap and the small cap index, or the end of the market, they tend to outperform, because from being an index specific market where there is too much of confidence, that traders take long positions, the leverage tends to increase. From there, it gets more stock specific, and when it gets more stock specific, that's where the mid caps and the small caps, they tend to outperform. So the set of statistics which you mentioned, they fit in quite well. That now we are into a phase where the indices are, the benchmark indices, Nifty, Bank Nifty, etc., they are going through a bit of a range, but the mid cap and the small cap end of the market, they're still looking very strong. And I think that's how likely I believe that the texture could be for at least the next couple of weeks, because you still have so many bouts of underperformance, so many I would say tick marks to be done for for both these indices to kickstart again. You have on one hand the private sector banks which are not participating the way they used to perform, and you still have large cap names on the financial services like Bajaj Finance, Finserv. Even these stocks are going through a sideways price action. The Nifty Auto Index is not participating the way typically we've seen the Auto Index participate. Realty Index is also taking a bit of a backseat. So when you have that kind of a setup on the sector specific, it's bound to be that the action would continue to be very stock specific. And I am of the belief that, as you rightly mentioned, that the mid caps and small caps would tend to outperform, and the Bank Nifty and Nifty could probably remain in a slight more sluggish kind of an uptrend.
All right. Let's also go across to Ruchi. She's tracking the PM-CM meet that's coming up on the back of those rising concerns around the COVID situation, highest case count now in the world. Ruchi?
Well, absolutely right, Abha. Today we are seeing almost 1.25 lakh cases coming to the fore as far as COVID-19 is concerned. That has definitely raised concerns. Also coming in the backdrop of states like Maharashtra and Delhi asking the centre to replenish their vaccine stocks as well, given the fact that even though the vaccination drive is underway, they have stocks left for only about 3 to 4 more days. In fact, yesterday ground reports by ET now also revealed that in a lot of private hospitals in Maharashtra, the vaccination stock was over. In fact, Panvel had also stopped the vaccination drive. In light of all these concerns emanating, today Prime Minister Narendra Modi is going to chair an all-important virtual meeting with all the chief ministers at 6:30 p.m. We're given to understand that this is coming in the light of India dealing with a second wave. Remember, the health ministry had also said that this wave, in terms of its intensity, in terms of how fast it spreads the infection, is far more higher, something that we've not dealt with before, and which is why we have to be all the more cautious. The health ministry has already written to states asking them to up their game in terms of testing, contact tracing, in terms of building the hospital infrastructure as well, making sure that there are enough beds, enough oxygen cylinders in place as well. So all these issues you can expect the Prime Minister to address today. 6:30 is when that meeting starts. We are expecting some of the chief ministers to tell the Prime Minister about their concerns as well. And this is also coming in at a time when the centre has been telling states to look at what kind of measures need to be placed to ensure that the spread of COVID-19 is contained. Having said that, localized lockdowns as well as night curfew seem to be making a comeback. So what kind of an impact that this is going to have on economic recovery is also something that we will have to wait and watch out for.
Absolutely. Well, in the meanwhile, we're also taking a look at those Q4 updates as they come in. Let's go across to Vinny. She's tracking GCPL. The company expects to post 30% sales growth in India business on the back of stable demand that they've witnessed so far in the quarter. Vinny?
So in terms of the brokerage consumers Q4 update, optically, when you have a first look at it, it seems like a strong financial, but let's not forget this is also aided by the low base that we saw in March 2020 due to the coronavirus pandemic impact on most of the companies, all of companies. So let's keep an eye out on that. Now, talking about the update coming in, the company said that they expect the India sales growth to be in the 30s range, that is around the 30% range or a bit higher than that as well. So keeping an eye out on the India sales growth at around 30% range, which was mainly aided by the strong show on the volume growth, which had a low base. Let's not forget that, as well as the price hikes that the company has taken during this period due to the increase in raw material prices. Like for the soaps, we had seen seen an increase in the inflationary of PFAD raw material as well. So that could, maybe we could see some impact on the margins, but the company has already taken some percent of price hike, so let's keep an eye out on that. Moving on to overall the demand trends, the company is saying that they have seen good demand trends across the country as well as across different categories as well, and that has remained stable across the geographies as well as categories. Now, growth in household insecticides, soaps as well as hair color has been quite good, and last year 2020 we had seen a decline in the growth of all these categories, so this time we are seeing an improvement on the base of lower base as well. So let's keep an eye out on all these things on the India domestic front, while on the international business also we are seeing that GAUM is also seeing an improvement. We're seeing an accelerated growth coming in over there as well, and healthy momentum has continued and is expected to report around 30% constant currency growth. Indonesia is also expected to see a gradual recovery. Mid-single digit constant currency sales is expected. In terms of GAUM, the management has said that they will be focusing on driving sustainable and profitable sales growth going forward as well. And all in all, a decent update coming in from GCPA.
Everybody yesterday was Barbecue Nation. It's a restaurant company. It's gone public when conditions are generally tough for the restaurant business, and especially if you have business coming from the city of Mumbai, state of Maharashtra and other metros. Pankaj, we know that this industry is an absolute mess, and the second wave of COVID is just like a sledgehammer which will break the back for some of these companies. Yet, despite this obvious concerns which are there for the hospitality industry, Barbecue Nation was circuit up. You track this one?
So we don't track the stock at this point in time. During IPO, we had given a neutral rating because the space what we like is more of a QSR kind of a model. And whereas in this case, it is more of a in-dining restaurant kind of a setup. And which is where we really do not have decent examples to sort of compare. So I think we would need to sort of study this more. Otherwise, QSR as an opportunity looks good because even with lockdowns, I think home deliveries are permitted. So that way, I think that segment or that pocket looks attractive to us. And largely, the gross margin profile has been better for existing companies. So I think that is an opportunity we would want to tap. Not typically, so QSR is what we would want to tap and not the typical in-dining restaurant types.
Now, we missed discussing this, so I'm going to just bring it out for our viewers. Steel prices are sitting at a record high, steel stocks are at a record high, and the steel capex is about to start. Now, the steel capex will start. It's very easy to understand that it's time to revisit steel ancillary or steel beneficiaries of companies' second derivatives, which will benefit if the capex starts. That's what I think markets are doing. HEG and there you go, in last 1 week, HEG in last 1 week is up 50%. Graphite India, I think it is the same promoter group, is up 27%. That's one big move which has come in the so-called steel ancillary space. Pankaj, is the merit in buying HEG or a Graphite India once again? Because I distinctly remember in 2018 and 2019 when we saw uptick in steel cycle, these stocks did exceedingly well.
Wrong in sort of in terms of sort of predicting the prices or the strength in the prices of steel. And I think with the US pushing for infrastructure stimulus, I think the prices for steel would remain at elevated levels. And mind you, steel production through the blast furnace route is already sort of quite high. So I think steel production through the steel scrappage route, I think, is the other option, and which is where HEG and graphite have a role to play. And it is more sort of environmental friendly also. So from that perspective, I think these two companies are expected to sort of benefit a lot. And I think our sense is that we have already seen a good price movement in the last 3 months. But within the two, we like Graphite India a lot more, largely because they have got a better balance sheet. So that way, I think that is one stock that we would want to sort of look at. But steel definitely has been a big surprise for us, and we were quite cautious on the entire space for quite some period of time. But whether it is main player or whether it is ancillary, I think it has benefited a lot, or it has benefited across segments. And I think graphite looks attractive to us within that space. Beside that, Ratnamani Metal is another company which we like, which supplies stainless steel to even pharma companies which are sort of putting up a CRAMS capacity besides supplying to oil and gas industry. So yes, steel looks good, and I think one needs to sort of revisit, which is what we are looking to do as well.
What is going on with Adani group of companies? Adani Total Gas is up 2x in last 1 year. Adani Enterprises is up, what in last 1 year? It is up 142%. Adani Transmission is up 150%. Now, Pankaj, there is no similarity in Adani Transmission, Adani Ports and Adani Gas. The only similarity is that they have a prefix Adani. All of them are promoted or are a part of the same corporate group. What explains the surge in Adani group of companies? And frankly, I have not seen too many people talk about it, but when I look at the market cap jump, it is absolutely amazing.
Correct. So we really do not track a lot of Adani companies, but we cover Adani Total Gas. I think, so valuation aside, valuation is obviously one of the things which is very difficult to sort of justify the stock current levels. But in terms of opportunity pie, if you look at, this is the only sort of pan-India player which is looking to tap the city gas distribution opportunity. Otherwise, you really do not expect much from MGL to do besides what they have been looking or doing in Mumbai. Similarly for IGL, besides NCR, you really do not expect them to do much. And then you have something like Gujarat Gas, which again is a sort of operating in a certain region. So if you have to look for gas as an opportunity pie, which is where we expect that the energy mix will tilt from 7% to nearly 14-15% in terms of gas, since it's a sort of environmental friendly fuel. I think that is the only company which looks attractive to sort of tap the entire opportunity on a pan-India basis. And which is why you really do not have a comparable, and I don't think one should be comparing with IGL, MGL valuation or in terms of P&L metrics wise. I think they've been sort of delivering decent set of numbers, so there's nothing much to complain except for valuation.
Okay, let's just mark what's happening with those pre-open rates as well this morning. Do remember, yesterday you did have quite a bit of cheer that played out in the equity markets. Looking buoyant across the Asian markets this morning, and you have another record close for the S&P 500 on Wall Street as well, so we should be piggybacking on those cues. And yes, indeed, off to a great start. As per the pre-open rates, 15,000 on the Nifty, that's 183 points. The pre-open ticks on the Sensex indicating as well that it's a steady start at the 50K mark with a 400-point bump up. Well, let's find out some trading strategies as well from the broader market universe. And Ruchit, what is it that you're looking at on the charts?
From the broader markets, I mean, one of the stock that is coming on the buying just from a momentum perspective is RT Industries. If you look at the recent historical data, the stock prices have been forming a high top, high bottom structure, and the volume along with the price of moves has been good. The momentum indicators are indicating now that it should see some good up move going ahead. So one can buy the stock from trading perspective at current levels, keeping stock below 1355. We are expecting somewhere targets around 1475 to 1500.
Okay, let's move on then. And Kunal, your top trading pick within the broader markets today?
Well, from the mid-cap banking pack, it's ICICI First Bank which I'm picking up. The stock did pretty well for itself yesterday. Very strong bullish candlestick pattern was seen on ICICI First Bank. And I think more importantly, when you look at this in the context of the last 6 months of the price patterns, a huge rally from levels of 25-30 to almost a 65, which it tested a couple of months back, then a retracement. So these are classical patterns which you are looking at on the charts, where you see a ferocious rally, then comes a correction, and now I think that the correction seems to be getting over with formations of these bullish price candles for ICICI First Bank. So we'll suggest that as a buy. Immediate target on a short-term basis to be kept at 62 at least, and stop loss could be kept at 55.
Okay, hope you've taken note of those mid-cap picks. Let's get a move on then, and here are our top 5 stocks to watch out for in trade. We begin then with Vedanta in focus, as 37.4 crore shares have been tendered by the shareholders. Remember, the promoters had launched the open offer to buy 65 crore shares or 17.5%, and this is equivalent to about a 10% stake. Godrej Consumer, as part of their Q4 update, says that there have been broad-based sales growth across categories of soaps, household insecticides as well as hair colors, and they have seen strong sales momentum in Q4 on a month-on-month basis. The Q4 constant currency sales growth has been seen in the mid-20s, and the trajectory on margins is likely to continue. CLSA has an outperform rating on GCPL with a target price at 800. Meantime, IRCTC in focus, as the company has said that due to the rise in coronavirus cases, the Lucknow-New Delhi Tejas Express has been temporarily suspended from the 9th of April till the 30th of April. That's the end of this month. Do remember they had already suspended the operations of the Ahmedabad-Mumbai Tejas Express from the 2nd of April. Bharti Airtel in focus too. Watch out for this one, as Airtel has launched Airtel IoT, an SG-ready platform that enables enterprises to harness the power of Internet of Things and be ready for the emerging era of connected things. On a separate note, CLSA has a buy with the target price at 730 on the stock. And watch out for financials, as Credit Suisse believes that HDFC Bank and ICICI Bank will be reporting, as well as IndusInd Bank will be dropping strongest earnings growth. He believes that buffers will come into play despite the COVID stress that will flow through, and that the lower QOQ provisions for private banks will be seen, but levels could remain elevated. Well, let's focus in on Vedanta in greater detail. Following that open offer, the promoter holding is set to rise by 10%. Mubina has the details of the kind of response that we've seen for the open offer. Mubina?
Well, Vedanta's shareholders sure seem to be a tough lot to please. Just ask Mr. Anil Agarwal. Yesterday was the last date for shareholders to tender in their shares to the voluntary open offer, which was launched by the promoter group in January. It was expanded in size and in price in March. Remember that the promoters had offered to buy 65 crore shares. Now, compared to that, as on yesterday, the last date of the open offer, shareholders had tendered in 37.42 crore shares. So that's a little over half of the open offer size of 65 crore shares, and of course at the price point of 235 rupees. At 65 crores, the promoters had intended to buy a 17.5% stake in Vedanta Limited, but with 37.4 crores, they had got shares which are worth only about a 10% stake. So if they accept this, their stake will go from 55 to 65%, a little under the 70% figure. Remember that we all have been talking about this massive super cycle that commodities are in the midst of. So that may be one reason why shareholders may not be very pleased with this 235 rupee level. I think when Mr. Agarwal intended first to use this opportunity to increase his stake in Vedanta Limited, the share price definitely was very lucrative, but in just a span of 1 year, things have taken a complete U-turn, and now shareholders don't want to accept even a 235 price point. Remember, LIC had as well asked for 320 rupees at the time of the listing. So yes, this is the latest. 26th April will be the last date for Vedanta to decide on whether they want to accept or reject these offers.
Okay. Focus back on the market then for a moment, and attention of course also has been consistently on those financials, but from the smaller financials or the mid-tier names, let's take a look at what else is possibly catching our eye at this point. Ruchit, anything else that's showing up on your radar when it comes to some of the mid-tier smaller names in the financial basket, anywhere that you still see an opportunity? Okay, Kunal, let me put that question to you.
Well, I think from the financials name, there are a couple of stocks which are looking extremely strong. So, when you look at the large cap ones like Chola Finance, Shriram Transport, these stocks have done phenomenally well. Whenever you've seen the prices pick up, or the market sentiment picking up, you've seen that these two have been the top candidates where you've seen, the initial leading breakouts happening on them. So, we saw the move yesterday as well for Chola Finance, and I think Shriram Transport as well over the last 1 week as well. Even on a choppy market has done pretty well. You then look at the slightly mid-cap names like L&T Finance. I think the stock is still struggling to break past about that 100 mark. It's just about trying to meander at the 100 level plus or minus some 5-7 rupees range. So I believe that it will probably take some bit of more time to get back into the groove and break past about that major resistance and cross that swing, a pivot swing of 100 odd levels. But the moment or whenever it does it, it requires a push from the other large cap names to try and outperform. And the other trying to show signs of consolidation. And the good part about the stock patterns when you look at it is that there has not been a major crackdown or a major breakdown into the stock prices in terms of patterns. At best, you've seen either volumes ebbing off, trading activity slowing down, and these stocks going into a listless price range. That's, I think, absolutely okay, because when you're into a market which already has a lot of stock specific opportunities, traders tend to flock into those kind of directions rather than looking at opportunities into these kind of stocks which remain into a bit of a consolidation. So all in all, I believe that it's a healthy correction consolidation which is going on. If large cap stocks in the financials, they tend to fire up, then I believe it could give a boost to the other mid-cap names like L&T Finance, M&M Finance, etc. to try and break out of their major swing resistances.
Kunal, also, what about some of these names that we, your usual graphite, HEG? I mean, we always see them move in tandem, and but given the kind of market makeup that we're currently seeing, are you surprised at the momentum on some of these names?
Not really, Abha. I think it's a very strong, steep momentum, and every stock in technicals we look at has a certain set of characteristic and behavior. Now, in various phases of time, these characteristics and this behavior, they keep on replicating and probably have a rhyming nature for themselves. So what you're seeing was the very strong commodity rush. We saw metal stocks doing pretty well. It was just a matter of time that both these stocks, graphite as well as HNG, were about to break past about their resistances. So I think the last 1 week move, even though it's come all of a sudden when the markets were just about tottering and not showing any kind of a breakout signs, but I for one believe that this was more of an impending move which was built into the stock price. And these stocks have a habit of going into multi-days, multi-weeks of a consistent and continuous trend on the upside. So whether it was the rise which these stocks had seen in 2017-18, and mind you, in just a matter of I think 1 year or 2 years, these stocks had given returns of 9x to 10x. So that's the extent of rally these stocks have already shown a few years back. So wouldn't be surprised that you might see more of a continuation move on the upside. So if the entire metal theme, the commodity theme still goes on, I believe that these stocks should move up higher. Any kind of a correction into these names, and a meaningful correction like a 10-15% correction from their swing highs should be taken as a good buy and dips opportunity.
Okay, Pankaj Pandey, great to have you on the show. Thanks as always for joining in. Let's just revisit where the pre-opening rates are settling in at. About a 200 points uptick coming in for the Sensex, 56 points higher for the Nifty, 14,875. So pretty much where we shut shop in trade yesterday. Let me also take it across to Vivek, find out what Credit Suisse Neelkan Mishra has to say about the policy.
Well, one of the most noted market voices, Neelkan Mishra of Credit Suisse, actually is saying is that along expected lines, the Monetary Policy Committee has actually gone ahead and left the policy rates unchanged and has also kept the accommodative stance of the policy unchanged. Now, what he is saying is that growth forecasts are something that have been retained, and also what the RBI said very clearly is that they will continue to do whatever is necessary to revive growth. Now, what also they are saying is that the forecasts have been retained for growth. 10.5% growth is what is anticipated for FY22 versus the IMF projection of 12.5%, and inflation projections is something that have been revised slightly upward. According to Credit Suisse, the positive surprise was the start of the GSAP, or the Government Securities Acquisition Program. He also believes that the government is all set to end FY21 on a record high cash as far as their balance sheet is concerned. Also, what they are saying, as far as the government or the RBI bond acquisition program is concerned, this particular program actually addresses the structural shortage in the bond demand until there is an inclusion as far as the global bond indices, and that is something that will bring steady FPI flows into the bond market. So under this particular scheme, RBI will come in upfront to a specific amount of open market G-Sec purchases, and this is something that, according to Neelkan, will actually enable orderly evolution of the yield curve. He also believes that the Credit Suisse at this point of time actually has their inflation targets and growth broadly in line with what RBI is saying, and he believes that this is something that would be keen and important to track out for.
Okay, done and dusted with the policy, 56 points higher. That is what the Nifty is indicating right now. And Kunal, exactly what we were chatting earlier as well. It seems that banks are the ones which are holding the benchmarks behind, whereas there is traction and more than that being made in the mid and the small cap space.
Absolutely, Aisha, and I think there are a lot of reasons for that as well, as we were discussing earlier, that how every sector goes through its phase of rally, then consolidation. It tends to come back to some mean reversion levels after being into overbought zone for quite some time. So I think we've seen those kind of sector churns which is happening. The more intriguing part when I look at the data specifically is the huge swings on the open interest on the bank Nifty. So just about the last week or the start of the previous shortened week, the open interest on the bank Nifty had swung up so high to almost a 1 lakh to 20,000, 1,29,000 contracts, which is a multi-month, multi-year high for bank Nifty in terms of open interest. And look at the last 4 days. In contrast, there has been a dramatic reduction of open interest, and now we are talking of a net OI which is just about 75,000 contracts on the bank Nifty. So you look at the extent of reduction of market participants who have traded on the bank Nifty in just the last 4-5 days. So that itself tells you that the interest is dropping in the bank Nifty, and the interest is swinging back and going back towards the mid cap and the small cap in the market. So I believe that's how likely the texture is going to be, at least for the next couple of weeks.
Okay, counting down to the market open then, and a lot of stocks which are going to be in focus. Of course, you're going to monitor whether banks see any rebound and whether it's any material or not. The Adani group of names is something that we've been talking about on a daily basis, although it has to be mentioned that yesterday the Adani group of stocks, after the heady run-up that they've had in the last 1 week, some of those stocks did surely take a pause. In the meantime, Vedanta, the open offer, has got about 58% bids. We've got strong sales and growth momentum coming in for GCPL, that's Godrej Consumer Products, in the fourth quarter. As part of their update, they issued that commentary. IRCTC has suspended Tejas Express amid the COVID surge, so that business is bound to get a little dampened with the spike in the COVID cases. And then, of course, Bharti Airtel, which has launched the 5G-ready LOT platform for enterprises, so look out for that as well. Credit Suisse, in its latest note, like just highlighted by a researcher, sees HDFC Bank and ICICI Bank to post strong earnings. That said, let's kick in with the first rates then this morning, and we're holding okay, much in line with what the SGX Nifty, or for that matter, what the pre-open rates were indicating. It's a tempered start, but again, this is exactly how we started off in trade yesterday as well. Let's see how we actually move from here, and whether or not we're able to build on any traction, and more importantly, take it all the way back to that 14,900 mark or not, which we did have a touch and go with in yesterday's trading session. I'm just going to wait for my screen to refresh, considering yesterday it was a clutch of mixed names that were holding up. Everything from a JSW Steel to a PI Industries to an IDFC and Chola Finance, which were all making heady moves. Just going to quickly refresh my screen. Okay, RT Industries, Motherson Sumi, Idea and SAIL. That's the one which is at the top of the pack with almost about a 2% uptick. IRCTC surely seeing a sentiment impact. That stock stock is down about 1.5%, and the entire reopening trade, bound to be so, continues to remain under pressure. So PVR, which has seen heavy amount of selling in the last fortnight, continues to be lower. PVR today as well has started off with a downtick, as is the case with an SRF, ONGC, Chola Finance and LT Finance as well. Nikunj, what are you spotting in trade?
It's not a bad start, Aisha, because while you don't have any big movers in the FNO space, you got a percent here, a percent, quarter of a percent up and down kind of a market today. Hero Motocorp, Maruti, Ashok, Leyland, all are trading with a positive bias. Metal space, I mean, that space continues to chug along very, very smartly. I'm intrigued to look at what's happening in the, stocks which are at a 52-week high today, and all of them are essentially steel stocks and smaller steel companies. You've got ferrous companies which have also now started joining the party. So the day once again belongs to what is happening to some of the metals, ferrous as well as non-ferrous stock. There is a constructive price action in On-Mobile. There is a constructive price action in Ramco Industries. NCC also seems to be trending up very smartly. I want to look at Barbecue Nation, yesterday's listing. I mean, it's a tough time to go public if you're in the restaurant business, but the institutional interest, I think, in the stock was so strong that the business which is going to be in disarray for next couple of quarters. Barbecue Nation yesterday was almost circuit up at 587. Barbecue Nation now is at 705. Can you believe it? And a market sometimes can leave you speechless. And there's one stock which is, I think, leaving everybody speechless. 20% higher for Barbecue Nation. Mari Santalia, good morning. Thank you for joining us. What is your market view, Manish? Are we in for a pause? Are we in for a retreat, or this market will continue to climb the wall of worry?
No, so I think that volatility will be there, but the direction of the markets are clearly on the upside. And